Hey, how's it going, PC team? In this video, we're going to go over what are algo spikes. Now, exactly how do you catch an algo spike? How do I trade them? And all that more coming right up. So if you guys like this style of content, you like these videos and want me to post more, all you guys have to do is click that thumbs up and subscribe. We're pushing towards 4,000 subs, which means we're close to being monetized, which is pretty cool. That would definitely incentivize me to make a whole lot more of these, a lot more free content out there. So if you guys like this style of video, don't forget to smash the thumbs up and subscribe. Without further ado, what are algo spikes? Let's get into it. Alrighty, y'all. So today we're going to talk about algo spikes really quickly and how do I trade them. Now, the algo spike is used by the market makers. This is not used by retail traders, okay? But as retail traders, we can identify them and trade them accordingly. Now, basically what it is a stock. This is an algo spike to the upside, okay? A stock basically, simply put, will push up towards a key resistance level. It doesn't always have to be, but usually speaking, it's a key resistance level. And then what happens is there's a big seller steps in. Say this is today, it was 250, okay, and there was a 25,000 share seller at 250. Now what happens is, and there's a reason I drew the wick above the sell level, and what happens is the buying pressure cannot withstand the selling pressure. There's not enough buying pressure to fill this 25,000 share order. Okay, so what happens? Well, these market makers see this. They also know that there's a lot of stop limit orders to buy this stock above 250. They know a lot of retail traders that are not watching the level 2 and do not know what algo spikes are going to buy it the second this breaks 250. Most of my money was lost in the markets because of this, because I wasn't watching the level 2. So if I didn't know how to read the level 2, simply by breaking 250, I would have bought just like everyone else. But because I know what algo spikes are, I choose not to trade them. For example, okay, 25,000 share seller at 250, and there's not enough at whatever 250, and there's not enough buying pressure to fill that order. So market makers come in, they pump up the buying pressure, they force the order to be filled, they force this order to be filled, and then they push it up a few pennies a share. So now all these traders that originally, Joe Schmo over here, that doesn't know how to read the level 2 because he's not in PC, he buys at 250, he buys spring at 250, fills at 252, 253. And the next thing you know, what happens? Well, the market makers have a bunch of shares because they bought all these shares and they cleared the order book above it so that breakout traders and immature traders will buy it. Now the stock pushes up, and then the exact same market maker is going to now flip the buy side over to the sell side, and what's going to happen? A fake out. It's going to form. You're going to have a big red candle just like this, and it's going to form, a decent sized fake out. Okay, that's what happens when traders don't know how to read the level 2. Okay. Now I'm going to show you what it looks like to the short side, and then I'm going to show you a live example. Okay. So this happened literally today. And I didn't trade the fake out because of this reason. Now, to the downside, it looks like this. Okay. We got a red barred candle. Say we got another red barred candle. And then there's usually a wick, and then there's a support line. Okay. Now, what's going to happen is there's a big buyer that steps up. Okay. On the support line, say this is a $1 support. Big buyer steps up right here, say 30,000 share buyer. So now what's going to happen is that buyer is more than likely going to help bounce the stock to the upside. Okay, usually speaking. But what ends up happening is it breaks it initially, it does not hold this level. Now all these traders are thinking, man, I broke $1, time to short it, right? It's going to continue to go down, because what happens is market makers made sure this order got filled completely, clear the order book, so at least it goes down a few pennies a share, and then they flip their orders from shorting back to the buy side, and then it bounces, and a lot of traders lose money on this algo spike. It happens all the time. Now, let me show you a live example. Okay, before I move on, does anyone have any questions about what an algo spike is? Right here. So you can see that clearly there's 20,000 shares of selling pressure at 450. What's on the buy side? Like 200, 300. Clearly the sell side is a lot heavier, and there's not enough buying pressure to pump the stock past 450. In a normal world where there's no market makers and everyone uses limit orders and there's no hidden sellers, generally speaking, this order should not break 450. Just simply put, due to supply and demand. Okay. Fills the order. Okay. But off of what buying pressure? There was little to none. So, okay, interesting. Pumps it up a few pennies a share. So enough so all those stop orders at 451, 452, 453, 454 are filled. So all these breakout traders have a chance to buy. And then what happens? I'm saying I think it's an algo spike. And now what ended up happening is this did reverse a little bit. It went down to 30s. But there's a lot of support at 450, so I'm sure the market maker probably dumped its shares back at 450, and it continued higher. But usually speaking, when you see an algo spike like that, the stock does not always continue higher. In fact, most of the time, actually continues a lot lower. So how do I trade said algo spikes? Okay, number one, sit out. The first thing I do is I sit out or I stop out or I lock in profits if I see one happening. I do not like to buy the breakouts of algo spikes. What else I could do? I could potentially try to join in short at after the order is filled. So what I do is in that circumstance, what I would have done is say I have a short order ready to go. Orders filled at 450, gaps up to 454. When it re-breaks back below 450, that pivotal resistance line, not holding it, that's when I would look to start shorting for a move down lower. And then when I see the buy pressure come back in, as the market maker starts to fizzle out, I would simply, lock in my profit. Now, I'm not huge on trading algo spikes. It's just not something that I've really done too much of. It just feels almost like cheating. I don't know why. Something that I definitely would plan on doing more in the future, because there's easily 3 to 5% gain off of these algo spikes. These algorithms are not looking to get rich. They're looking to continually do this to traders all day, and taking advantage of their education level, because if you know what algo spikes are and you know how to read level 2, this shouldn't happen to you. But most traders, in fact 90%, don't know about them, and therefore they fill their stop orders at 251, and then they get stopped out on a pump down to the downside because of these market makers. There are high frequency trading algorithms and softwares that are trying to take advantage of the retail trader daily. So you have to learn how to outsmart algorithms. Now, how do you do that? You just do the opposite what all these traders are doing. So if these traders are looking to buy to the long side, the breakout level, then you probably should look to short it if there's a algo spike. Likewise, look to buy the dip if you see an algo spike to the upside, or technically the stock is heading downward. That's what algo spikes are. I would not personally trade them too much, just because the stock's already being manipulated in front of your eyes. It can be fairly choppy. But there's definitely some profit potential on said algo spikes. Does anyone have any questions as to what are algo spikes and how to trade them?